Today, I'm going to share with you how I got $10,000 in Tesla stock completely free, and it is taking my stock portfolio into the stratosphere as we crossed $140,000 as of today. Now, as a dividend investor, most of us aren't attracted to Tesla, but because I got my shares for free, I want to show you what I plan on doing with them, and we're also headed into some parabolic territory. So let's just jump right into this.
Drop it.
Welcome back, my passive income investors alike. I recently just made a video on Tesla stock going into bubble parabolic territory with Virgin Galactic stock. I left the link in the description below so you guys can check that out. In this video, I'm just going to share with you how Tesla sits within my portfolio, how I got the shares for free, and what I plan on doing with them in the future. But in order to do this correctly, I need to show you how I have my 140K stock portfolio set up so you can see where Tesla sits within it, and then I'm going to show you the actual accounts. So just to start this off, because I am a dividend investor primarily, I have 80% of this entire portfolio sitting in what we call a TFSA, a tax-free savings account, which means all the income this portfolio makes is 100% tax-free. And I would not own Tesla within this account because this is my backup income. And I have over $100,000 in this account, making me about $400 a month, completely tax-free, which is the equivalent of about 4%. But because I've had so many capital gains in this account, my yield on cost is about 7.6%. And that is absolutely incredible considering I'm holding companies like Apple, like Microsoft. I've got my banks in here. We've got utilities. We've got really foundational companies that will project into my later future. So to avoid messing that up, I don't touch this nearly as often. But moving into the account where things get a little bit more confusing, and this is where I own my Tesla shares, is in my RRSP account. Now, an RRSP stands for Registered Retirement Savings Plan, and this is what we call a tax-deferred account, which basically just means that I don't have to pay tax today and I can lower my income bracket if I put money in this account. So what I did last year was I dumped $20,000 in my RRSP, and I also had a decent amount of write-offs, as if I did not do that, I would owe the government between $8,000 to $10,000 in taxes. But now that I'm saving that, I figure why not buy Tesla stock with it, because I can't pull money out of this account without paying penalties. Therefore, it is not a good dividend account. It is a long-term account, and I can only pull out about $5,000 a year, in which I will be penalized 10% off the top. But if that $5,000 is completely profit, and I have a year where I don't have a lot of income, I wouldn't be a bad idea to pull this out and maybe retransfer it into my TFSA. So in the short term, that is where Tesla sits. I also have J&J in there because it's another really good foundational S&P 500 stock, as it sits in the top 10 S&Ps along with Apple and Microsoft. So that is what I've been utilizing the RRSP for, and it's a very tiny portion of my income. But it's a good reminder too that all the capital gains I get from Tesla are tax-free until I pull it out of the account. Now, including the capital gains that get made in this account are tax-free, I only end up paying the withholding tax and the basic income tax when I withdraw that money. So this was the smartest thing to do, because if I kept Tesla outside of this account, well, the government would have took a huge portion of it, and then any capital gains I get out of it, well, the government's going to want a big piece of that too to some extent. And then moving into the regular account, before I fully break down what I want to do with my Tesla shares, my regular, what I call my managed account, is where I just hold stocks that I don't feel comfortable putting in these accounts. I've maxed my TFSA, so I can only add $6,000 a year. My RRSP isn't worth adding to just for the sake of adding to it, unless I have a year where I have a lot of income and I want to do what I did last year and break my income down so I don't pay as much tax. That account has to be used pretty precisely to get the full benefits. But my managed account is just where money sits. So this is where I make income off my job. I funnel money in, and then I decide where I want to spend it. I decide what accounts it's going to end up going in, and I kind of just put it in parked positions that usually pay pretty decent dividends. I have two regular investment accounts, one with RBC, and then I have one with Bank of Nova Scotia. And the only companies right now I hold within these accounts are MO and BTI, and I am continuing to build up my cash position within these accounts until I figure out what to further do with it. Now that you've seen why Tesla is sitting in this part of my account, why it is perfect to be sitting where it is, now I want to talk to you about what my current plans are with this stock as we just head into parabolic, crazy territory with Tesla. And then to finalize everything, I want to show you the actual accounts themselves. Just specifically on Tesla, we are starting to head into a position where a lot of the future growth is getting really pushed into the current market cap. And we are heading into what Bitcoin did, what the MJ sector did a year or two ago. And at some point, it is going to reach peak velocity. And then what's going to happen is Tesla's going to have to spend a couple years catching up to that market cap, which means we either see a leveling off or a big parabolic to the downside, and we see what we'd call a correction within the company. So over the next few months, I'm going to be really closely analyzing my Tesla position, and if I feel uncomfortable, what I might do is pull out some profit, and then that way I can leave enough shares in the company to go long for the next 3 to 5 years while being able to take some short-term profits to reinvest into dividend stocks and hopefully continuing to grow my passive income, because the whole point of this is for passive income. So slap a like if that is something that interests you. But let's head on over to the accounts and look at the exact positions as they stand going into the final trading hours of today.
Now, first of all, so there's no confusion as I try and be 100% transparent and honest. So slap a like if you enjoy my honesty. But here's the accounts as they sit in this very moment right into after hours into the markets. This account sits at $137,000. And if we move into my Royal Bank account, we have $3,244, putting us just over $140,000 combined. So let's just take a quick review of the accounts and what is going on in here. With the tax-free savings account sitting at all-time highs, this capital gain doesn't really resemble the full amount as I've actualized some of it, which wouldn't show up on this bar. Considering the minimum contribution limit is $69,500, I have currently $108,000 in here, which is an incredible capital gain rate, which has been bringing my yield on cost to the stratosphere, because there's nothing better than getting a 7% dividend yield on your current money that you worked for. I mean, that's like real estate rate returns. And we can see everything going on within this account, which I will be doing further updates on later. But this is the vast majority of an account that I really never want to screw with. And I just want to slowly, reinvest the dividends and try not to mess with it by buying really speculative stocks, because I could take the risk of losing a huge percentage of my market value where it currently sits. So we want those recession-proof, your BTIs and MOs of the world. And moving into the managed account, I don't need to talk about this too much, but this account is just going to be sitting flat for the time being. The most important account is the one that I keep talking about, is this RSP, where my Tesla shares are going to be taking me into some kind of crazy level. Tesla has put this account up to like almost a 30% return, which is already absolutely insane. I did not buy what I would consider a huge percentage, but a comfortable amount that was allocated toward my risk and toward the rest of my portfolio, as Tesla probably makes up about 8 to 9% as it stands right now of the overall portfolio, getting closer to about a 10% stake. And that is a little higher than most people's comfort zones of maybe 5%. But because I am young and I could see this doing very well in the next 3 to 6 months, I think it's the appropriate risk. And I don't plan on ever getting rid of all of it. Obviously, it would be nice to see this double. If we get close to doubling this, I would have to level off some bit. So that way I have no risk exposure to the company at all. And I would have 100% profits in shares in the company. So I could sell 10 shares and hopefully have 10 shares of what the equaling amount that I put into it is. So that is some pretty incredible stuff. And then I'd have to further figure out what I would plan on doing with the capital, but it would probably go toward another company like Johnson & Johnson, because that is some extreme security. But looking at the combined portfolios where everything sits today, the risk allocation and the dividend allocation, as I haven't done a full update on this as of recent, we can take a look and see my monthly dividends sit right at $150 even. And we're also taking a look at the pies that make up the portfolio allocation. So with the dividends, the way they're dispersed, they fairly evened out at this point, where 30% is still consumer staples, and that would be my MO, my BTI, those kind of companies, and those are like my sin stocks. They pay out the biggest dividend yield, and they are some of my largest holdings, so they obviously make up the biggest percent of my dividend pie, but not enough that I am uncomfortable. This is to the point now where I can honestly set it and forget it and let it coast, because in the next 20 years, what I have here is going to allow me to completely retire. We can see everything that has come together in the portfolio in this one chart. And if you guys are interested in trying to find a better way of tracking your stock portfolio, head on over to the stockmaster.com, where we put this spreadsheet together. It's only like $12. Have the similar problem that I do, which is all your accounts are spread out. And I'm also going to be doing a full breakdown at the end of this month on my income. But here's a bit of a highlight highlight reel going into this, as I've had some dividend payments come in. I got a few more. YouTube paid me out, and I'm looking forward to some Shopify payments. So it's going to be really neat, so you guys can see my full financial breakdown. So consider subscribing and slapping a like if that's something that you would look forward to. To finish this up, we are heading into some very, very fascinating territory when it comes to Tesla specifically, along with SpaceX. I feel like I have captured my third unicorn. I've captured 3 stocks that I call unicorn stocks, because they're stocks that have almost 100% return within just a couple years. And I got it with Canopy Growth Corp. I got it with Apple, and I'm hoping to get it with Tesla. So I would love to know what you guys think about all of this in that description below. And I hope you guys stick around. So stay cool, stay awesome, because I look forward to chatting to you tomorrow.